Last week, investors' nerves were shattered by a variety of factors such as the U.S. economic strength, resilience in the labor market, and nosedive in Apple stock. The benchmark indexes went down as a no surprise. The new week is going to be equity volatile. Despite the silence of the Fed's policymakers, the economic calendar contains some high-impact events. And today, the calendar is empty. Corporate news is ruling market sentiment, and the news is mainly positive. The major stock indexes closed a quiet session on a Friday with modest gains. The Dow Jones climbed by 0.22%. The Nasdaq closed almost flat with a 0.09% uptick. The S&P500 rose by 0.14% to close at 4,457 points. Futures on the stock indexes traded with confident gains in the New York pre-market. The high-tech sector came to the forefront. The S&P 500 is expected to trade in the intraday corridor between 4,450 and 4,510 points. Despite modest growth on a Friday, the three main stock indexes closed with the weekly losses as investors voiced concerns about the Fed's interest rates and the rally in oil prices. For the week shortened by Labor Day, the S&P 500 slipped by 1.3%, the Nasdaq lost 1.9%, and the S&P 500 shed 0.8%. Apart from a rally in the oil futures for 3 months in a row, economic data worsened worries about inflation, and the services PMI came in stronger than expected. Besides, U.S. weekly unemployment claims went down. Mixed comments from Fed policymakers have increased uncertainty. New York Fed President John Williams kept his options open, while Dallas Fed President Lori Logan stated that it might be prudent to put interest rates on hold at the next meeting, though further tightening may be required. Apple shares rose by 0.3% on Friday, although the closing price at $178.18 was about $2 below the session's peak. Shares of the iPhone maker plummeted on the news that Beijing banned central government officials from using iPhones at work. GameStop shares closed down 6% following reports that the U.S. Securities and Exchange Commission is investigating GameStop's retail chain chairman, Ryan Cohen. After 2.9% loss over the 2 sessions, the S&P 500 tech sector closed higher. However, the energy sector, which grew by 0.97%, showed the highest percentage growth among the 11 sectors. By Monday, Wall Street futures climbed, driven by a recovery in the tech giants. We are expecting a rather interesting week ahead, and Fed officials have entered a quiet period. Until the policy meeting, the market will no longer hear alarming speeches, which means investors will be focused on macroeconomic and corporate data. 2 key indicators will be decisive for the Fed's rate decision: the PCE price index on Wednesday and retail sales on Thursday. It's expected that the overall U.S. consumer price index inflation accelerated to 3.6% from a 3.2% last month, although the Fed may still feel relief as the streaker core inflation is forecasted to drop by 0.4 points to 4.3%. Now the market is trying to puzzle out the degree to which retail sales have slowed corporate to the hot figures in July. The crucial economic data will be available in midweek. At present, traders are digesting corporate news, which is still related to AI, driving up the value of mega caps. On a Monday, Tesla was at the forefront. The company's shares jumped by 6.4% in the pre-market as Morgan Stanley upgraded the electric vehicle manufacturer's rating from a neutral to overweight. Due to the potential growth in its market value from Dojo, Tesla's supercomputer Dojo could lead to a market value jump for the automaker of nearly $600 billion. And Morgan Stanley analysts stated, Tesla, already the most valuable car manufacturer in the world, began producing a supercomputer in July for training AI models for autonomous vehicles and plans to spend over $1 billion on a Dojo in the next year. Meta shares added 1.3% after Sunday report stated that the company is working on a new AI system that should be as powerful as the most advanced model offered by OpenAI, the Wall Street Journal reported on Sunday. Among other companies, Apple's shares grew by 0.5% after falling by nearly 6% last week due to China's restrictions on the use of iPhones by government officials. On a Monday, Qualcomm announced that it has signed a new agreement with Apple to supply 5G chips at least until 2026. And the company's shares leapt more than 8% in a pre-market trading. Boeing's shares rose by 1.4% after the White House reported that the deal to purchase 50,737 MAX planes from the aircraft manufacturer was worth $7.8 billion. The US dollar is opening a new week with losses. The US currency is pulling back across the board. Its index was trading at 104.69 at the time of recording this video and 0.34% down. The intraday Canada is seen between 104.40 and 105 points. The US dollar index is on the defensive on a Monday, and the Japanese yen grabbed traders' attention. The yen advanced on a Monday after comments by the Bank of Japan's governor. Katsuo Ueda revived hope that the central bank could shift to a completely new monetary policy rejecting negative interest rates. His comments caught the market off guard. As a result, yields of Japan's 10-year government bonds increased by more than 5 basis points to 0.7%, the highest level in 9 years. The yen has appreciated by 1% against the US dollar, pushing the greenback down. Amid the soft US dollar, the pound sterling leapt by 0.54%. The euro gained 0.3%. The Australian dollar and the New Zealand dollar benefited the most from the greenback's weakness, having advanced by 0.96% and 0.75% respectively. The US dollar index fell by 0.3% today, but closed on a Friday with the gains for 8 weeks straight. The Canadian dollar is also holding the upper hand over its American counterpart. The USD CAD pair is now trading at 1.3590 and 0.37% down. The instrument is likely to trade in the intraday Canada between 1.3560 and 1.3640. The loonie went up against the US dollar on a Friday when stronger than expected data on the labor market cemented the prospects of another rate hike by the Bank of Canada. The Canadian economy created 39,900 jobs in August, more than twice bigger than in the forecast. The unemployment rate remained at 5.5%. This showcases economic strength despite high interest rates. Markets see a 44% chance of another Bank of Canada rate hike by the year end, up from a 36% before the jobs report. On a Wednesday, the central bank kept its benchmark rate at a 22-year high of 5% after raising it in June and July, noting that the economy had entered a period of weaker growth. The Canadian dollar was also supported by crude oil futures, which continued to steadily increase, although on a Monday by a rather modest step of 0.05 and 0.15%. The crypto market is overwhelmed by the doom and gloom. Crypto assets are not able to shrug off pessimism. Bitcoin opened the week at 25,600, 0.8% down. The most significant news today is that India is considering regulating cryptocurrencies in line with the recommendations of the International Monetary Fund and the Financial Stability Board. Initially leaning towards a complete ban, Indian authorities have changed their stance, recognizing the need for global consensus on regulating cryptocurrencies. The news had a little impact on the market, and top coins continued to look for the bottom of the red zone. As for the intraday corridor for Bitcoin, the token could continue to decline to 25,350. If support does not hold, the price may fall below $25,000. An alternative scenario looks like a Bitcoin recovering to 26,100. Thank you for watching. We are closely monitor the markets and provide you with the up-to-date financial information and analysis. We are waiting for your questions and comments. Subscribe to our channel and see you online tomorrow.